Welcome to the ETF.com video series. My name is Dave Noddick, Managing Director of ETF.com. I'm here at Inside ETFs with Steve Sachs, Managing Director, Goldman Sachs Asset Management. Thanks for joining us.
Dave, always good to see you.
So big year for Goldman Sachs. You nearly doubled the size of your ETF offering and had some really interesting product launches. The one that caught my eye, of course, was JUST Just, your entry into the ESG space. Tell us a little about why you're making the approach you're making there.
Yeah, no, absolutely. So it really fits squarely into our strategy overall from an ETF issuer perspective. As we've talked in the past, Goldman Sachs Asset Management entered the ETF space not because it's the hottest thing and what everybody else is doing. Our client base was simply asking for the product structure. When you think about our active beta suite and the growth that we've seen there, to your point, nearly $11 billion in assets now across 13 funds, just a little over 3 years in the business, that's all driven by the fact that these strategies existed inside Goldman and our clients were simply demanding them through a different delivery mechanism, which is the ETF. So when you think about just, J-U-S-T, that's very typical of what we want our core strategy to be. Very thoughtful, very much focused on the intellectual property that either lives inside Goldman Sachs or in this case, outside Goldman Sachs. We partnered with Just Capital, which is a nonprofit which is focused on essentially changing corporate behavior from the inside out, using the capital markets to help corporations behave better.
One of the big criticisms of some ESG strategies is they're sort of telling you what ESG means.
Yeah.
Just as different, they're asking people what ESG means.
Yeah, it is, and it's a great point in that when you think about, again, ESG as a business, it's a very big business at GSAM, right? It's something that we've been focused on for a number of years, but typically through the institutional client separate account mechanism, which to your point, very customized, right? ESG has traditionally meant what shouldn't I own versus what I should own. What really resonated with Just Capital and with JUST, the ETF, and the reason we launched it, was this is not exclusionary, this is inclusive. So the idea is that Just Capital every year surveys the American public, and they ask them, what do you care about from a corporate behavior perspective? They've been doing this for a number of years, it's a massive amount of data, it's a very data-driven approach, tons of metrics, and the idea is simple. What do you, the American public, care about from a corporate behavior perspective? And what they say each and every year is fair wages. Does the company treat not only their employees right, but the community, the environment, how they deal with regulation? And so ultimately what happens is they take this information, they boil it down into an index methodology that ultimately results in this. Within the portfolio, which is a Russell 1000 based universe, so it's a core allocation type product, right, broad-based, what you end up with in the portfolio is very interesting. You end up with companies that pay 7% higher wages. So, right, creating more US jobs, paying those workers more. They give 4 times more to charity. They recycle 9 times more of their waste. And the real kicker is, these companies have 3% higher return on equity.
Right.
That's essentially what you're looking for in a portfolio. As actually a client said to me a few months ago, you guys should just lead with that instead of the ESG. Back to the main point, ESG means different things to different people. This has always felt more like impact investing to me.
Right.
Having an impact with the dollars in which you're investing.
So you guys are clearly on the innovation forefront here with some of your fixed income offerings, what you offered with GSLC, the 9 basis point smart beta fund, now JUST. What are you looking at in 2019? Are there more things in the hopper we should be expecting? Or do you think that this product line takes you for the next little while?
So we'll continue to be thoughtful about the product launches that we do, again, focused on what are we good at. When you think about, again, the active beta suite, GSLC, quantitative stock selection, we've been doing that for 30 years at GSAM. Fixed income, and that really probably is the big focus for us in this next year, in the coming years. When you think about the Access suite of fixed income ETFs that we launched, G-Bill, GIGB, GHYB, so right, short duration treasury, investment grade, high yield, that's really based around and grounded in how we think about managing fixed income actively in our business, right? Goldman's a $700 billion fixed income manager, world class. We're applying those same principles in our quantitative business, in our ETF business, building rules-based, passive indices to track ETFs on. We'll focus there. We still think that the fixed income space in particular is very underserved from an ETF product perspective, and particularly from an expertise perspective, that's something that GSAM can bring to the table.
Well, great. We look forward to seeing that, Steve. Thanks very much for joining us, and thank you for joining us here at Inside ETFs.